Joining us for a look at the week ahead is a trading analyst from Forexlive. So Ryan, what are the implications as China had to suspend trading on its stock market today?
Well, China is going to be obviously a big theme this year. The growth worries are always on and off the boil, but they're back on now, especially with a big drop further into contraction in the data last night. The losses in stocks, that's obviously going to affect major markets. We've seen the European markets down a chunk today. The US will probably follow suit. Futures already in the S&P are looking down 30 points. GDP is going to be a big thing. The switch from the US, the market's attention is going to go to China and GDP. And it's a bit of an overdone fear in my mind because, even if China GDP drops to 6% or worse, it's still much better than most of the developed world. And that's something that the market has got to concentrate on, that it's not that bad. It's whether it drops any further is the worry. For currencies, commodity currencies are obviously looking to bear the brunt of that. But Aussie dollar, for one, that's had a lot of resilience recently. So it's going to be a big test for the Aussie dollar. We've got a range sort of 74 to 71 either side, and that's probably the range to trade at the moment.
Okay, well you mentioned the US there, and the Fed is set to remain in the spotlight, as on Wednesday the minutes of its December FOMC meeting will be released. Though this is, of course, when the Fed decided to raise interest rates, would you agree it will be the hints toward future movements that will be most significant?
Yeah, definitely. We got a good message with the press conference afterwards. We've got a good message, and I don't think anyone's seeing a significant steep path of rates. But we're going to need to see the individual members, the individual thoughts, see how dovish or how hawkish the message is within the minutes, because that's going to be a big influence on how the market views the next few rate hikes. We've already had comments from Mester over the Asia session saying that she expects 4 rate rises this year. We're going to get dovish members who are probably going to look at maybe another 1 or 2, and Janet Yellen's always settles into a dovish tone. I don't think we're going to see rates shooting up, but the market is going to jump between data point and data point. And they're probably going to look for something in the region of a rate rise maybe each quarter rather than anything more than that. I think for the US dollar, we're going to see a prolonged period now where it settles into a consolidation phase. I don't think we're going to be seeing any big jumps to sort of 130 or even perhaps back to the 125 highs. The market's got its wish. A lot of the market was long dollars and trading on the rate hike. We've got the rate hike now, and everyone's sort of getting out the trade and asking what next.
Right, and lastly, which indicators have you identified that have the most potential to shape the financial markets over the next 5 days?
Yeah, we obviously got the US jobs data, which is always big, but it's probably going to take less significance this week because it's not dependent, or a rate hike is now not dependent on the jobs market. The jobs market's been strong for a while now. You'd have to really collapse over a couple of months to see any worries come in. So I think Europe is going to be the attention, one that grabs the attention of most of the market. QE disappointed a lot of the market. What the ECB pulled out late last year. They mentioned that the economy was recovering, and that's why they held back and tinkered around the edges. So we've got inflation data tomorrow, which is going to be important. If we see a big jump there, or a sizable jump there, then the euro's going to pick up on it. We've also got economic sentiment and retail sales later in the week. And I think the euro in the early part of the year is the currency that people might want to look at for a long opportunity.
Thank you for joining us, Ryan. Be sure to check back to see how these market movers develop throughout the week, and for our weekly wrap-up with Louise Macaulay on Friday. See you next time.